Are you worried that not having a traditional credit score might keep you from buying a home and use that VA home loan? You're not alone. In today's video, we're going to burst that myth wide open. I'm going to show you how you can still qualify for a VA loan without a traditional credit score using what's called a non-traditional credit. Now, stay tuned because the information could be the key to unlocking your dream of home ownership, and let's roll right into it. So, an overview: the VA itself does not have a minimum credit score to use a VA home loan. Lenders do have minimums based on a lot of factors for that lending institution, and also if they're brokering deals with their investors. All that's going to be play a major factor into this decision and what they can and can't do. That's why if you can't get approval with one lender, you might want to look around because you might be able to get it with another. Now, there's also a big difference between not having a credit score versus having a bad credit score. Because with no credit scores, you're going to go into non-traditional credit, which we're going to go over here in a little bit. But if you have bad credit, they're really looking at the last 12 months of payments. Have you made all your payments on time? Sometimes if you have collections, that can affect your overall loan. And they also look at things like compensating factors to compensate for the past credit, right? Because credit is a history of what your credit was and not what it's going to be. Now, I'll also link a description in the VA handbook down below because they do have what these compensating factors look like and what you need to have. But I'll also tell you, never disqualify yourself from purchasing a property unless you talk with a professional that can walk you through that process. Now, if you guys are interested, always happy to help you and this process. There's a link down below to schedule a call with me, and we can walk you through anything that you would like and answer any questions. Now, when you don't have a credit score, also, typically the terms are going to be more favorable, but that really is going to be driven by the lenders. So talk with them and see what options are available. So let's talk about why you don't have a reported credit score. Now, this really happens two ways. Either you don't have liabilities that are reportable to a credit report agency, like let's say, for example, a cell phone payment. Now, the flip side is that you could have stopped using available credit that's on your credit report for a period of time. So an example of something like this that we recently saw was somebody had a Military Star card. They stopped using it about 3 years ago. They had a lower 600 credit score, and their credit should have been absolutely perfect, but the bureau didn't have anything to go on that would be current. So what they did is they went out, used their card just to purchase something really small, reactivate that trade line. So now they get the full trade line back to them as showing them being able to make payments on time, and their credit score shot up to upper 700s where it should have been in the first place. I know it's kind of, if you don't have credit, why can't you have really good credit? Because there's no way that a creditor could measure your credit worthiness of your past performance. Now, this is where the non-traditional credit comes in play, because you want to be able to know what you can and can't use and also get that ahead of time. Now, if you guys are looking online at your different credit scores, just know that sometimes we'll see like a Vantage score or a different FICO score. There's hundreds of different models within all of this, within the three major credit bureaus. So you really want to understand what your mortgage FICO score is in all three trade lines and what's actually coming back. Because we've also seen people have credit scores with a Vantage score, like a Credit Karma, let's say. But then they don't have one on the lending side. So that's why it's so important to go through an entire process of figuring out your financial situation with somebody that's licensed, that knows how to be able to do this. So now let's talk about these non-traditional credit reports. Now, typically these are going to be bills that you pay, right? Like a cell phone bill, gas, electric, water, cable. All those, typically those things are not included on your credit report. Now, you can also self-report these on credit bureaus. Some of them allow you to do that. That'd be one way to get ahead of, let's say, shopping for a home, because now you want to establish that credit history. I'm not sure if they charge you a fee for that or not, but typically a lender is going to require at least 3 trade lines with 12 months of proof of payments on each of those, right? So, and it has to be also a bill you pay on a monthly basis, not something you pay once a quarter. They're looking for a monthly repayment plan, and again, they're really looking at 3 trade lines, which rent would also be one of those if it's not reported on your credit report. Now, again, lender's going to need to be able to verify this, that you have all the payments made. Sometimes they do what's called a credit supplement. So they'll have their own credit bureau actually reach out to these creditors, confirm that you've made all the payments on time, and they'll actually update your credit report with that information. Now, since you don't have a credit score, what does a lender typically assign a credit score to that buyer? Typically, from what I've seen, they apply about a 680 credit score, and that's where your pricing of the loan is going to be based on, like what your interest rate primarily would be. So they're going to look at those factors and let you know how they can factor into to make things work for you. The other thing that you want to consider, some of the big factors, is that typically, normally, it's considered what's called a manual underwrite, right? So I did a video not too long ago understanding the 2 different types of VA approvals, one being an automated underwrite, and another one being a manual underwrite. Okay, so automated is you put a bunch of stuff in the computer, click some buttons, and it says, yes, you're approved to use the VA loan. Congratulations. As long as all the information matches up to the system that you've been submitted, you're pretty much good to go. In a manual underwrite, they actually have to manually review your entire VA home loan and confirm that it meets the VA standard in order for the VA to insure that loan, right? So that's why non-traditional is a manual process, right? They have to go in, manually update these. Then once they've updated and verified all that information, they match it up against the VA's guidelines and confirm that yes, you can indeed purchase the property and use the VA home loan. So hopefully you guys have some good takeaways. Let me know if you have questions down below. Always happy to answer anything you guys have. You have a great day, and I'll talk to you soon.